Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we begin to see what we have to look forward for this week in Forex, we first have to start off with the Greek debt situation. Will the private investors agree to the debt swap? This agreement is basically what's holding up the next round of funding. So, they keep saying the deal is close. Is it being voluntary or are they being forced? But again, this agreement of private investors with the swap is necessary to get the next round of funding. We had the Fed speaking, and they said that they're going to keep the interest rates low through 2014, which is longer than they said previously. And they also lowered their forecast for 2012 GDP, keeping it in the 2% range instead of the 3% range. What we're going to be watching for next week is, of course, we have another European summit in efforts to stabilize the euro. Many countries are going to begin releasing their employment situation. And, of course, on Thursday we have some manufacturing data coming out of China that many will be watching for. Let's go ahead and take a look at the charts. Let's go ahead and take a look at our market sentiment indicators. We're going to start off with the dollar. Now, the market had a very nice January, but let's take a look at the dollar, and we can see that it did not. So we have that inverse relationship being confirmed here. And we have our long line drawn in here at just below 79. So we'll have to see if this is where we hold up. Will the dollar find support here? With the economic indicators coming out this week, we might find some catalyst one way or the other. Although the FOMC keeping the rates low, you could kind of tie into this big move down here into that. But with the weak dollar, what does that mean for gold? And you can see gold really has taken off here, hasn't it? And if you look in here and see this 1750 range, look at these wicks in here. That's where the sellers pushed it down. So as we move up here, we have to start watching 1750. If we get to 1750, certainly it can move up to 1800. But this is where sellers found value, so we'll have to watch that there. But gold certainly looks beautiful. And we will finish off with crude oil. And crude oil is back into its range, 96 to 102, just moving sideways. Now, certainly at the pump, we're pushing 350. Certainly not a great thing. But crude oil definitely just going sideways at this point. Okay, so after that examination of the dollar, we look at the euro dollar chart, and we can see that the weakness in the dollar means great moves here for the euro dollar. And after we bottom out here at some key monthly lows, we've made our way right on back up into where we consolidated here towards the end of 2011. So the question is going to be, where can we go from here? Now, obviously, we're in a sell zone well above our long-term moving average. We see that the euro is in control with the weakness in the dollar, and we can see the dollar falling off here, trending lower, while the euro is starting to make a little move up here. So the way we want to look at this is two things. We'll zoom out here again to the monthly, and you can see this is what we talked about in the past on the monthly charts, where we were in January. The January lows is where buyers found value, and they've done that. And you can see that they've really brought us back up back into the consolidation of it all. But keep in mind, long term, we have continued to make lower highs. So we're not going to get overly bullish, but it is important to note that we have made a very nice move here towards the end of January. And now we'll see what happens if we enter into this new range, 1.31 up to 1.34. Now the pound dollar is actually even stronger because of this downtrend line that we broke above. But at the same time, the pound dollar never got as weak as the euro dollar, of course, with the stabilization problems of the euro. But you can see that we broke above some key resistance here, although we still have another range up here, 1.58, which is where the 200 moving average is. But if we come in here and look at the daily, we can see that this 1.577 is where in the past sellers have said, hey, let's push this down. And ultimately 1.587 is where we have our line drawn right now. Now, likewise, we are in a sell zone well above our long-term moving average. But ever fractionally, the pound is in control as we start to see the pound started to die off here just a little bit also. And again, I want to show you the importance of this downtrend line. This is a monthly downtrend line, so it's very strong, and you can see that this sort of wedge that we're in, and if we are breaking above that, that's certainly very good for the pound dollar and whether or not the pound can keep control and keep moving higher. Finally, we're going to look at the dollar franc. And again, the weakness in the dollar shows here, and we have broken a key support line, 0.9281, and now we're going to have to start watching 0.891 here on the dollar franc. We are actually in a buy zone with the franc clearly being in control. You see this divergence here. Although the franc began to level off here, the dollar's weakness is really what allowed for this big push lower, But as you can see here on the daily, where we are here on a daily, this is a place where buyers in the past have defended. You could easily draw a line here at this 0.91 price level. So we're going to watch this, and if we break here, then we have to watch out for 0.891. Now we're going to go ahead and take a look at our watch list. We have two that we focus in. First, our low volatility watch list. Here we're looking at the 1 hour time frames and Bollinger Bands, looking for that squeeze, looking for that consolidation, the market finding and trading within a range, and we're looking for that breakout, preferably in the direction of the trend. Right now we'll be watching the dollar Canadian as it continues to consolidate. The inside bar watch list is where we're looking at the day now, not an hourly or 4 hours. We're looking at the day's range and seeing if the day's range is within the previous day's range. And for that, we're going to be watching the Aussie dollar. For Education Spotlight, we're talking about the difference between what we read and what happens in real life. Certainly, many of us have gone to college. Myself, after getting my degree from Pitt, I went on to get my master's in education, and there was a lot of beautiful things they talk about teachers and what will work in the classroom. But once you get in the classroom, you learn there's a whole other world. And the same thing is like that in trading. There's a lot of complexity to trading. And you can get on Google and find all these trading systems. You can read these great books from Barnes & Noble or whatever. But you really have to take the time to learn the practical application. And there's two folds to that. Yes, you need the paper trade. You need a virtual trade. Whatever form of virtual trading you choose to do, you need to do that, to get a feel to the effectiveness of these different strategies in today's market climate. But in addition, you need to at least go out there and trade one contract, or in Forex, we're talking about lots, and break that lot down to like, 0.10 lot. Because the other thing you have to learn is the execution of the trades. Virtual trading, the execution, it happens and everybody's happy. And even though Forex is liquid and you should be able to get in and out of trades very easily, you still want to go ahead and practice with small lots to get used to how your broker handles execution, to make sure that your true what your profit range was in virtual trading is equal or matched, or it might even be less in live trading because of that execution in the fields. Please take the time to like and comment and subscribe. Again, give us feedback. Let us know what you like, don't like. We've got a couple people here giving some good information about some natural gas stocks and gold and crude oil, so appreciate that. And we're looking forward to bringing some great things here in 2012. You know about our resources, but in the end, it really comes down to who you want to be as a trader. And what we try to focus on is help people become financially literate, develop a trader's mindset. With our managed forex account, there's nothing wrong with it. We are not bashing signals and newsletters, even though we talk about that. What we talk about is you need to be educated so that you can make the discernment on what you're being told is right for you. And that's what's great about our managed forex account. Full transparency. We work with the leading brokers, and we come up with an individualized trading plan, and we take the time to educate you, and we learn about your risk tolerance and how much you feel comfortable with to make sure that how we invest your account for you matches your investing goals. But like I said, it can make a difference whether or not you're working with us through managed accounts, getting newsletters, working on Google, getting a trade system. If you're not able to pull the trigger, and pull the trigger is not just about executing trades, but it's about giving the go ahead that this is the way I want to invest my money to help my family. Thanks guys, and I'll see you next time.